Good afternoon. Welcome to the Market Wrap for 4th of March 2022, number 90. Stuart Williamson at the helm. Just an informational sharing exercise, educate our clients, educate as many people as we can as to what's going on in the UK buy-to-let market. This wrap unfortunately comes at a very poor time, obviously with the Ukraine geopolitical uncertainty or all that sort of stuff. We've been asked a lot what's going on with the UK property market. And I'll cover that, really, the implications of what's happening in Ukraine at the end of the wrap, if I may. In the interim, I'd like to just go through what's happening in the UK in general and take it from there. Okay, if you remember, at the end of 2021, early indications from that the housing market and all the research behind it was that 2022 was going to be cooling down. All the big research houses, in fact myself included, said that. But instead what we've seen is continued strength in the seller's market, as is actually a lack of supply. Average house price inflation is now running at 12.5% per annum, according to Nationwide Building Society. So let's look a quick whirl around the nation. Okay, in the Scotsman, they talked about the housing market will be more subdued in 2022, but prices will still rise. Gentleman called Mike Fitzgerald said, from rapidly rising house prices and excellent sale prices, sometimes 40% overvaluation, to a new huge record in volume sales and record selling times, the Scottish housing market has enjoyed exceptional growth in 2021 and we expect it to continue, although somewhat subdued, in 2022. Wales Online say experts give their predictions of the Welsh property market in 2022, with prices expected to keep rising. According to Wales Online, experts think stock will be in short supply, prices will rise, and there will be a steadying and a disappearing of seasonal peaks, which is an interesting take. They go on to say that the COVID-19 pandemic has changed the landscape of housing in the UK, with statistics from various sources revealing that Wales has been one of the top regions, experiencing the most noticeable increases, and according to Zoopla, this is likely to continue. Latest figures also show the annual price increase year-on-year comparison in Wales stood at 15.5% for the period October 2020 to 2021. Overall compared to, I think it's 10.2% for the UK. Looking across all the nations, and I haven't covered Northern Ireland, but we'll get to that. Looking across all the nations, the overall figures. Last week, HMRC released a provisional estimate that there were 85,520 housing transactions in January. So what does that mean? It's 13% below levels seen in 2021, but it's still 7% above the average for January 2017 to 2019. Similarly, money and credit statistics from the Bank of England show that mortgage approvals in the same month were 13%, so up in January, were 13% above the pre-pandemic norm, but below what we saw in 2021. The slowdown in market activity reflects a number of different factors. Firstly, the shortage of stock that's available to buy, and if you can't buy, you can't get a mortgage. And secondly, the increased sense of caution given cost of living increases, prospect of further interest rate rises, and Savills is suggesting that continued imbalance is fueling a price growth though. On the flip side, the effect of interest rate rises could be mitigated by a relaxation in mortgage regulation. This week, the Financial Conduct Authority opened a formal consultation on its proposal to withdraw mandatory stress testing of affordability at the point of the borrower applying for the mortgage. Instead, it wants to rely on other forms of existing regulation to guard against excessive levels of household debt, which to me seems absolutely balmy. They should keep it as it is, control the market. The underlying shortage of stock available on the open market has been well publicised in the property section, according to Savills, and has significantly contributed to continued price growth. And on UK house price growth increased 12.6%, as already mentioned, in February according to Nationwide. In fact, in February, Rightmove reported that the average number of properties on agents' books, including those under offer, have fallen from 59 in 2021 to a year later to 40 in January 2022. This is despite an increase of stock on the market of 11% year on year. So basically it's moving a lot quicker, it's selling a lot more quickly. Figures from 20CI give us a slightly better picture. They suggest that in February, new sale instructions were up 7%, and they were that amount higher overall than they had in the previous 12 months, previous year, 12 months previously. Sales are 31% above 2017-2019 average for February as well. So the picture is ongoing upward movement across the UK, which is being fueled by shortage really of good stock and people moving quickly. Okay, next one. Thought you'd never become a millionaire with property? Well, it's happening more and more in the UK, but it's all about buying wisely. 689,189 residential properties in the in Great Britain, are now worth more than £1 million. That's equivalent of 1 in 42 homes, or 2.4% of the housing stock. The number of 1 million homes is up 22%, or 125,000, since the end of 2020, surpassing the 2015 high point, where last up there, of 608. The value of 1 million plus homes now is 1.356 trillion. And this has really been brought about by a pandemic-induced reassessment of housing needs and the ability to lock into low interest rates. House prices rose on average to January by 9.7%. That created 125,000 new property millionaires, according to Knight Frank Research. So if they can do it, you can too. It's about buying well and buying in the right locations. New house deliveries. Has that target been hit by the government in 2021? 243,000 new homes were built in England in 2021. This is England, not the United Kingdom, according to the EPC data. This comes close to matching the record, 255,000 built in 2019. But since then, over the last 2 quarters, it looks like the recovery has peaked and supply is falling. Now, a way to understand this, just to get it right, is to look at consent, which is consent to build. I applied for the council says to me, you can build. So, full consent was granted for 272 new homes in 2021. That's the lowest yearly total since 2015. In 2020, it was much higher than that. The only regions it wasn't higher are in London and the North East. So construction starts returned to pre-pandemic levels last year, and basically the way it's going this year, the figures will be worse than any year back to 2007. So we're not building enough stock. Okay, so that is the whole point. There's not enough houses going to the market. The consents for building, there's not enough of them going in. So we're getting a deficit that's not being overcome. There's too much house building going into the private sector and not into the public sector. The pressure of these new builds is having an effect on the land market, where land prices are going up, and at the same time, because there's not enough land out there, house builders hoping to increase their land stock, their land pipelines, can't get the land they need, and so consequently fewer consents are being approved. That's the issue. In addition, you've got cost inflation and labour shortages for builders. That's reducing the amount of stuff being built. So the supply of new homes is therefore likely to fall considerably in 2022, and it's in a downward tangent after that. Something completely different. Savills do great podcasts, and this is one that's linked just below. Now, I don't have permission to use it, so it's basically where will the next generation live, work and shop. I don't have permission to use it, so don't listen to it here if you don't wish. go onto their website and have a look. It's Savills, and they're very good. And it's the view of what younger people think is going to happen in the UK property market. How will lifestyles change? How will working practices change? Okay, so finally, what will the UK crisis do to UK property prices? Let's look at the real influencers. Without a doubt, oil, gas, diesel, aluminium, nickel, wood, wheat, and even sunflower oils will all rise. Little known fact, Russia and Ukraine account for 80% of all sunflower seed exports. They're all going to go up in price. This is going to increase the cost of living in the UK. Inflation is already at a 30-year high at 5.5%. Energy bills are set to increase by 50% in April, and now look likely to raise again at the next point of recalibration in October. Inflation is basically turbocharging. It could be as high as 8% in April, according to Capital Consulting, the consultancy. Bank of England's Monetary Policy Committee has a target of 2% inflation, and they're going to be watching this and going, boy, what's going on? The question now is whether the conflict will force another rate hike sooner rather than later. Now, Andrew Wishart from Capital Economics predicts the bank rate could peak at about 2% this year, pushing mortgage rates to 3.2, which as expats mean that ours will be up at 4.2. However, Martin Beck, the chief advisor at EY Item Forecasting Group, rules out a rapid increase in rates, and he says any chance that the MPC may have gone for a sharp 50 basis point increase is now looking very, very slim. He then goes on to say, of course, higher energy prices imply higher for longer inflation, but given the source of this inflation, an external event which the MPC has no control over, he thinks they'll be more concerned about the risks to the economy than the risks to inflation. So mortgage rates will probably now rise more slowly than we were expecting. In addition, Carl Thompson, a property economist at the Centre for Economic and Business Research, CEBR, agrees an imminent raise now seems less likely prospect. Such a postponement would slow the rise in mortgage rates and provide a marginal boost to house price growth over the coming quarters. Thompson predicts, in the short term, we can expect the property market to continue its upward trend, but high inflation will eventually force interest rates up, which, coupled with squeezed household finances, will slow the housing market down, so we could be looking at a flat period from the end of 2022 into 2023. So, although there's a terrible thing going on in the Ukraine, the outlook for the UK property market looks like it's going to be plateauing, and that's our view from APW Towers. Continued increase in interest rates, cost of living going up terribly. I feel, very badly for the people in the UK, but we'll have a plateauing of house prices, not a massive crash. So it's still a good buying opportunity out there. Thank you very much for listening. I hope that made sense and hope you enjoyed it. Please do subscribe and like, and please do listen out for next week's experience. Thank you very much. Bye-bye.